All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for the last Monday in August. Next week, we're getting a new link out to you, and we will be having our commentary on Tuesday since Monday is Labor Day. And good to be back with you. We will not be doing a trade findings and adjustment this week. Basically, Wednesday is the last real day of trading. Thursday and Friday, we go to dead days, low volume days. And we really wouldn't be placing a trade on a Thursday before a 3-day weekend when the volume just goes to nothing. Abraham, welcome. And Dave, glad you made it too. Good to see you guys are here. All right. One of the neat things I found was this article last week on a 32-year-old millionaire poker champ on becoming mentally tough. Not so much about reading people, but I enjoyed this article on the Jungle Man, as he goes by, and I felt some of these things can be said because they relate to trading. Number one, the mindset Cates used to become a great poker player. The growth mindset is important, beyond the possibility that there are other ways of doing things. I got to tell you, I truly have tried everything from pips to Forex to commodities to options and futures. There's nothing I haven't tried. There's nothing that I don't look into to tell you, hey, you know what? By education, safe option strategies and maybe guerrilla trades are the best ones that are out there. They're the most honest ones that are out there. But I found that truly you have to have a growth mindset, and the growth isn't necessarily for, hey, you've got to change your strategy, you've got to change your methodology. The growth is being able to put the time in to get a general idea of what's going on and why, how market reacts to certain things. I'm shocked. The market's down roughly 4% from Powell saying that, hey, you know what? We're going to go ahead and we're going to keep rates steady, right? I don't know why people were surprised that Powell said this. I don't know why people are surprised that the market's going down. We started protecting last Monday as we saw some stocks hit most recent highs, 6 months highs. We were putting protection on, getting ready for Powell that's supposed to say nothing, but said enough to spook our markets into what, a 3.37% down day on Friday. We kind of knew it was going to happen. I'm shocked at how many people in my circle that are supposedly managing money and watching the market were surprised that the market's going down after a Jackson Hole type of event. Well, he's not making policy at Jackson Hole. It doesn't matter. We've learned, plain and simple, that, how would you say it? Plain and simple, we've learned, I'm going to switch to a different microphone here. Hopefully you can hear me a little bit better now. Plain and simple, we've heard and we've learned time and time again, Powell keeps putting his foot in his mouth. This isn't new. If you're a money manager and you're spending any amount of time in front of the market, you should know that even though Jackson Hole is not a policy-making statement or time period, that most definitely comments from Powell are going to move the market. And we start protecting accordingly. In fact, last week on Monday, we put a lot of protection on as things were at some highs. Number two, how to stay mentally tough when you're losing. Now, you can't just tell yourself, hey, it's going to come back. Losing by itself isn't a reason to quit. It's more about how determined you are to actually win, how willing you are to change. And again, in change, I think a lot of people just do the same old, and change also involves spending quite a bit of time doing your research, reworking your numbers, making sure what you thought was supposed to happen was still happening. There's a lot of people that just sit and wait, that just sit and let it go. And I'm going to answer that email that was brought to me in regards to that. Let's see if you are here, and you are here. So I'm going to answer the email in regards to letting things just sit and wait. Someone over the weekend said, Kevin, I think it's time to go to some more full collar trades. And to his credit, I was like, yeah, I probably should. I've been struggling with where to put short calls on. And I almost did it before we bumped up like 9.5%. So I'm glad I held off. In fact, he's here. But the comment was made, why don't you consider putting some more short puts on? Let's get into full callers. Things don't look really good between now and October. So think about it. And he's right. Thinking about it is just finding that good time that we can add those on so that it makes sense. So being mentally tough is putting the work in to look at what you're doing to see if things need to change. I highlighted the last little sentence there. You also don't want to let winning too much affect you negatively. It's easy to think, oh, I'm just always going to win, and that's how it works. If we learned anything about the market, it's ever changing. It's alive. It's a living, breathing thing. I kind of chuckle because occasionally some of you will say, well, Kevin, you said you were going to do this. And that evening that I said that, that was my plan. But by the next morning, if things have changed, just because I said something the night before, if it doesn't fit the current market trend, then I'm not going to do it. I'm not going to just, oh, because I said something the night before, I've got to go put on a losing trade or losing position. You have to understand that the market is ever changing, ever moving. It literally is a living, breathing thing that from night to night, things can change pretty darn quickly. All right. Last but not least, why reading people is the biggest skill you need to learn in poker. I think it's the ability to find truth, to recognize what is truth and what is falsehood. You need that in combination with something else, the ability to take action on it. That is so readily applicable to the stock market. Why reading the market is the biggest skill you need in investing and in life. You've got to find the truth. And I'm not jumping on a Trump bandwagon, this or that. All I'm saying is there's a lot of falsehoods that are listed out there by big money to manipulate the stock prices. We've all seen the manipulation. We've seen a company that has this massive downgrade and then 3 days later has an upgrade from a different person in a different department, and they bought a crap ton of shares as it fell 15, 20%. The market is manipulated. So it's hard to recognize what is truth and what is falsehood because it usually goes back down to fundamentals. And it's running numbers and it's crunching numbers. Again, it's going back to what we went through on January 10th. If you go back to my Hurley investment, all those numbers we check basically on a monthly basis this year. It's usually more on a quarterly or a half year basis, if not a year basis. But because we've had such a drop in our market, we've been checking those numbers to see if they still stand true. If where we thought those stocks could get to on January 10th of this year still had the ability to get there with today's market, with today's numbers. And the neat thing is a lot of what we have, if not 95% of it, is still in place. And the hard part is the ability to take action on it. We kind of had a bad day on Monday. And Tuesday, Wednesday, Thursday of last week, a couple of you sent some emails in on, did you guess too early? Are you wrong? Hey, are you putting protection on prematurely? Hey, what are you doing? We're still in an up market. And the reality was we still did pretty well, but we were protecting because we were hitting some of those highs. We were protecting because Powell was speaking on Friday. He could have said something on Thursday. And in all reality, we were protecting on Thursday because if something came out, we didn't want to get caught with our pants down. But it's really hard to take action if the market isn't moving exactly the way you want it to. Not that it wasn't. We were down a little a couple days, or up a little couple days. It basically moved sideways. But we did get a couple emails that basically questioned us, why are you protecting so much stuff on Monday? Well, if I go to my notes, why are we protecting so much stuff on Monday? Yes, I still handwrite some of this stuff in here. I don't have it all written down. But the short answer is, yes, we understand on Wednesday of last week when I got the email, S&P was up 0.29. We were up 0.82, even though we had our protection on. Let's see, Thursday, we were up 1.29. In fact, I should just go to Friday because that's going to be the big day, right? Friday, and I think I have it written down. I should. Friday. For crying out loud. Friday market was down 3.37. We were down 1.51. We made up 1.86% of that downward movement. Now I'm going to run those numbers just to make sure I'm correct. 3.37 minus 1.51, 1.86. We made 1.86% or a little over 60% of the downward movement of our stock market on that day. We already had puts in place, 170 puts, and we gave ourselves the ability to make up some of that downward movement. Now, there have been some stocks, some of these smaller ones, right? Apple, Under Armour, Bank of America, that have lost 40, 60, 70% of their value. And if we make up 45% of that value, account still might be down 15 to 19%. We understand it. The good news is on $17 million, which is kind of your guys' group here, times 0.0337. We're grateful that $211,000 didn't turn out to be $572,900. So if we had just followed the market, we would be down a horrific number, 572,900, which really gets us right back to the email that was sent to me. Good morning, Kevin. And Kevin is spelled wrong. That's Kevin, which is kind of funny. It's kind of Keeve and Kevin. Keeve is K-E-V-E. I am I-N. Keeve is K-E-V-E. Just for you guys to know. Over the weekend, I met my Fidelity financial planner. I am on course to my financial plan, but it doesn't seem like it. Would you please go over the issues you see with financial planning one more time in the Hurley Investments Market View commentary? I am not just seeing why my plan obviously isn't working, yet my planner thinks I'm right on track. Thank you in advance. So the biggest problem, right? Let's go. All right. Why is it not doing that? Because it's in whatever this stuff is at. So Arial 14, that's why it looks different. When you copy and paste an email, it looks a little different. Come on. New Times Roman. Let's do 16, let's do bold. All right, now I'm good. So the problem with financial plans is twofold, right? Averages and compounding returns. So in a financial plan, you put in a percentage or a return, and most of them use the S&P 500 that doubles every 7.75 years, because on average, S&P 500 averages 7.75% yearly, which means the first year you are up. So let's do year one. You're up 1.075, right? And then your second year, you're at roughly 1.156, right? And then your third year, you multiply that by 7.75, and all of a sudden you're up to, should have had my calculator ready to go. 1.1, let's just start doing it all. 1.075 the first year times 1.075, that's 775. 0.0775 times 1.0775 is 1.61, and then your third year times 1.0775, as all of a sudden your money has grown by 25%. Then your fourth year, your money is worth itself plus 347. The fifth year times 1.0775. You've got a 45% return. It's itself plus a 452 growth. The 6 year, 6 times 1.0775. That's that one. Do it. 1.452 times 1.0775 is equal to 1.564 seventh year times 1.0775. It's 7.75 growth rate. It's now worth 1.685. The eighth year, actually, it grows to 1.816. And the ninth year, you double your money. And that is simple interest of just growing it. $957. And this is compound interest / growth of 7.75%. And sometimes you hear it now as much as 9.95%. But the problem is in that 20-year period, at 7.75 years, your initial dollar's grown to $2. At the 15-year mark, it's grown to $4. And at the 20-year mark, it's grown to $7.2. But in real life, it doesn't even double till that 10-year mark. I came in here and I did the 2020 little performance. S&P drops each year since the 2020. Got to get my self plugged in. So just here's a little chart on the S&P 500. And I took every dollar and just did it. First year you put your dollar in, your first year is down 10%, and it correlates. Your dollar's worth 90, your dollar's worth 78 cents, your dollar's worth 60 cents. So every dollar you put in 2000 was only worth 60 cents. Then we started to grow it back, started to grow it back. We're doing so good. I'm missing them here, right? And then all of a sudden, on the on the 8th year, your dollar goes back down to 62.7 cents. Then you have an up year and you have an up year. You have a flat year where it's the same. You have an up year. You have an up year. You finally get to be profitable in 2013. So 13 years, your money didn't grow. Then you kind of go through, you have a little down year. You're going. But so in 2020, every dollar you had in the stock market was worth $2.58. It basically for 20 years had grown 150%. That was 20 years it grew for, well, it was 150% return if you started in 2000. You didn't break even until 2013, which is the lost decade that we talk about in our stock market. When you have these type of returns, when you're following the S&P 500, you're not going to have a financial plan that works. There's no compounding interest. The biggest problem with the financial plan is that compound interest and growth on a variable return. So if you're looking at your financial plan and saying, hey, the numbers don't add up, it's because they don't. And it's because if you take the growth rate for every dollar, it really doesn't double every 7.75 years. It doubles every 9 years or so, right? If you use real returns, we're up 150% over a 20-year period from 2020 to 2020, from 2000 to 2020. So this is why your financial plan might not make a whole lot of sense. The numbers don't just add up. Obviously this year, Friday the market fell 3.4%. It was 3.37. Last week, S&P was down 4%, Dow was down 4.2, NASDAQ was down 4.4, Russell down 2.9. For the year, S&P is down basically 15%, Dow's down 11.2, NASDAQ's down 22.4, Russell's down 15.4. It's a pretty bad year in the market. And as I look at it, if I was to take all this, pretty good year to be picking up shares. So someone asked, well, where are you going to add those more shares at? If you're looking at everything, where would you add those more shares at, right? And it comes right back down into our charts. So let's take a quick peek at our charts. And I'm going to have you guys tell me where you think we should start picking up some more of those shares. We have added some, but we've been pretty standoffish on picking up those shares. In 1 week, we basically were in no man's land and down and testing the 50-day. This is pretty common. We're obviously now bearish. If you look at the Dow Jones Industrial Average, we are bearish. We will probably go down and go into that oversold or test the 30 line, which means we're going to break the 50-day. And the question is, where are we going to settle it out at? We're going to settle out at 3190, 31,500, or are we going to go back down and test these lows down here? The good news is the Dow is only, what, 31 stocks? We don't pay a lot of attention to the Dow. In fact, if you ever hear someone talk about the Dow as an important index, you know that's someone that's bought into the Kool-Aid of those that talk on TV. There is not one manager that manages money that ever compares himself to the Dow. S&P 500. Technically bearish now, but we are holding the 50-day. So what will happen? Did we use up all of our buy orders today? Well, about a half hour before the market closed, we were positive, but we fell away into the last half hour. Our market was down 0.67%. That tells me we have used up a lot of the buy orders. It's almost a doji, but it's not. I would say I'm looking to add some shares right around the 3,900 level. Reason why? I feel like it's a strong level of support. 1, 2, 3, 4 days, 5 days, 6, 7, 8 days, 9, 10 days, 11 days, 12 days. It acted as support or resistance. It's my belief, looking at a chart, we're going to see the S&P 500 come back down and at least test the 3,900 level. Yes, today we held the 50-day, but because we were selling into the close, there does not seem to be a lot of buy orders to hold it up. I would think we're going to break that 50-day pretty easily and head back down. We will see. And then if you look at the NASDAQ, been down over 22.4% year to date. NASDAQ does not look particularly good. We also were falling away at the end. So it would not surprise me if we also break the 50-day. And again, I'm going down to that 11,550 range where we seem to have some stronger support. All I'm doing is looking at the charts. This is where I'm looking at seeing where we're going to be buying some new shares of stock, seeing as that we're pretty cash heavy still in accounts. Interesting question just came in. Do you consider the saying that September and October are usually very bearish, the worst 2 months of the year? Yes. I mean, the reality is September is like the third worst. October is typically the worst month of the year. And I think we're going to follow that. Can we have some better inflation numbers? I guess the short answer is, can the government prop up gas? Maybe. I don't know if OPEC would do that. And to be honest with you, I really just don't see this administration pushing fossil fuels. So I think we're looking at about the best that we're going to see when it comes to our gas prices. I mean, let's face it, they're all for electric vehicles, which I think is kind of funny, right? If we can't hold on to and pay for gasoline at $5, it makes it really hard to go out and buy a $60,000 to $75,000 car. With that said, we'll probably have a pretty dismal September, October. Yet we could come all the way back to break even on our stock market if we saw some big changes in the elections. And really, it's not like the Republicans can do a whole lot, or it's not like they would do a whole lot to change this. But if you can put the government into gridlock, if you can go ahead and see the Republicans possibly win the House so they don't have to fund any executive orders, our market's in gridlock. The markets love gridlock, and that would be a really neat way to see us do a huge Christmas rally this year going into December. But again, that comes down to the elections, and if I can make my 2-bit comment on the elections, it wouldn't surprise me if we had some areas drag on for weeks again and drag on to not call a winner in a timely manner. So the short answer is you nibble. Just because you can buy 1,000 shares doesn't mean you go out and you buy 1,000 shares. You nibble, you add 100. You maybe wait a week and see if the markets are coming back. You don't just because you have all this money, which in all honesty, we had all this money 8% ago. And we only nibbled on, we've only had basically 100 shares of things across the board. We really haven't thrown all of our money into shares because we couldn't figure the market out. It wasn't making sense to us. So because of that, we just held on to a lot of cash. We've had a lot of cash, in all honesty, since April, and we're going to hold on to that cash until well, we're going to hold on to it until we find a bit of a bottom. So great question there. Hopefully I'm doing a good job of answering your question. Okay, September, I think we're going to end down 2%. Earnings, I didn't put all this stuff in. I should have put this stuff in for you guys. Earnings, nothing really going on today. Tomorrow, the meme stock, well, that's actually Best Buy, Big Lots, Hewlett Packard, and Baidu. So we're going to be paying attention to Baidu tomorrow. Wednesday, Five Below. Let's see here. Thursday, Hormel Foods. AVGO is Broadcom. Sportsman's Warehouse. And then nothing on Friday. Really, economic reports are the biggest thing this week. Well, nothing today. Tomorrow, we have the FHFA Housing Price Index. We have the Case-Shiller Housing Price Index. And we have consumer confidence, which has been just falling down. We might see a little uptick because gas prices were a little cheaper. Wednesday, the ADP employment numbers come out, and they are nowhere close to being what the actual numbers are. We also have the Chicago PMI. Thursday, initial continuing claims. We have productivity, which is going to suck. Unit labor costs, which are going to suck. ISM manufacturing, which probably going to suck. And consumer spending, which actually should be doing good. From everything that I've seen, gas went down and people started to spend money again. And then Friday, average work week numbers. Can't spell. We have the Narn Farm payroll numbers, the private payroll numbers. We have hourly earnings. We have unemployment rate. And we have factory orders. All right. I found some interesting articles. Gas prices are falling. Here's what's happening. Why it'll continue to fall. Dodge will discontinue Challenger and Charger. So if you have a couple of those old muscle cars, they're going to increase in value. Hopefully you'll enjoy knowing that that your muscle cars of the day are being discontinued. They will be worth a little bit more coming up here in the near future. Always kind of interesting to know. All right, what else do I have? China needs Taiwan's biggest chip maker. It's a really interesting article on China needs Taiwan more than Taiwan needs China. That's a bit of a fallacy. Taiwan is part of China. It'll be interesting to see how they can stand the, what is it, 2 economies, 1 country? Eventually China will say that's enough. But interesting article looking at things a little bit differently here. Price for disaster. Fund manager says inflation's here to stay. The two beaten stocks can do well. Probably the reason why I have this is because the two beaten stocks he thinks can do well are ones that we own. Dollar General and JD Sports. Don't buy the Apple Watch right now. It's pretty simple, saying, hey, in 2 weeks they're going to show some new ones, which means the current ones are going to go down in price. And if you want to get the newest and greatest, you'll get it in 2 weeks. So kind of interesting. Don't buy the new iPhone or the Apple Watch now. And then these are Wall Street's favorite stocks. I just found this one interesting because it lists a couple of what we have in here. Their favorite stocks, they're saying which are the best. Microsoft, Salesforce, Disney, Visa, Boeing, Walmart, Home Depot, Goldman Sachs. Average target price of where they can go. 20% upside for Microsoft, 32% for Salesforce, 20.7% for Disney, 26.8% for Visa, which means it really would have to move through the holidays. Boeing, 26.7%, 12% for Walmart. Home Depot has an 18.5% upside, and Goldman Sachs has a 14.4% upside. I just increased this in here, or put this in here, because I found it pretty interesting that some of our core holdings are in here. With that said, I've taken a lot of time going through the start of our market and why those financial plans don't work. Any questions you guys have that I can answer for you? Are there any questions you guys have that I can answer for you? And I knew you were going to ask that. Kevin, is there any merit in getting a financial plan? And so the short answer there is no. A financial plan is a broken instrument that never works. So there's no use getting a financial plan, in my opinion, that's going to measure or come close to your needs. I've said it in the past, and I'll say it again. You want to make as much money as you can as safely as you can. That should be your goal for investing. As for finding a number, a financial plan, the whole premise is off. And I mean, if you'd like one, I can print you up 60 pages. I can make it look real pretty. I can charge you 25 to 10 grand for it, but it's not going to help your financial future in any way possible. If anything, it really is just an excuse to rotate you out of a fund into another fund. And I won't play that game with people. So I'm going to go ahead. I'm going to call you out. Lance, you want to pay me between 2,500 and 10 grand for something that will 100% never work for you? I will charge you for it, and I am welcome to give you 60 pages worth of BS, and the choice is yours. I hope you choose otherwise, just as a heads up there. Stuart asked, how do I print these notes? Stuart, I put these notes into, you go to myhurleyinvestment.com. You can literally click on anything that we've been through, and the notes are listed right here that you can just highlight and print. So that's the bit that you can do there. Let me go ahead and go back. I'm pretty sure commentary for last week, or just send an email and I'll send them to you. But basically all these notes, you can just highlight, print, or you can just read them. They're all listed here. The video's there so you can hear it, or you can just go through and read them. And I have them dating back to like 2008. So all the notes are in here. You don't really need to print anything. You can just go back and reference or take notes on the notes. All right. Any other questions you guys have? If not, I appreciate you guys being here. Again, we will not hold trade findings and adjustments as our week is basically over on Wednesday. We'll go down to really low volume. And next week's we'll have a new link for you. I'm refreshing the link, so I'll put all your guys' stuff in and I'll register you guys into next week's. But next week's will be Tuesday evening, as the Labor Day is Monday. All right, guys. Good night. Thank you, Abraham. Appreciate it. Thank you, Dave. Thank you, Lance. I appreciate it. Guys, have a great evening. My pleasure being with you. I hope this is helpful so you know what's going on, what we're thinking. And with that said, let's see bye to you tomorrow. You guys take care, and we'll see you again next Tuesday evening. Bye-bye.